Hello, everyone, and thank you very much for having me again in this Icon 2021 Investment Forum. Special thanks to Randall and to Marvin for always having me here. And thank you very much for allowing me to be part of this very esteemed panel of speakers. I have been asked to present to you what we see is going on in the property market, and we just have a few slides to share with you, and we are giving a copy of these slides to the organizers, and please feel free to share it with whoever and with how many people you want to share it with. Thank you. The world has been ravaged by COVID, and the Philippines is no exception. The economy has contracted almost 10% last year and another 4% this quarter. And I'm happy to say that the property market has proven to be the most resilient industry we have today. And property values continue to hold ground in most of the sectors of the property market once you go upper middle and above. The COVID crisis has ravaged the middle market and below, and they have primarily been the ones who's lost their jobs, cut their salaries, not enjoyed their bonuses, or lost money in the markets. But the upper middle and above continue to stay strong, and in certain cases, certain property prices have appreciated. Ayala Alabang has gone up by 20-25% in the last 15 months. And in the other extreme, the highest appreciating land values in the Philippines, you will find in Batangas Bay. The villages of Punta Fuego, Terrazas de Punta Fuego, Hawaiian Cove, Tally Beach, and Maya Maya have all, in 15 months, appreciated by 300%. And I'm excited for places like Camilo Coast and Anvaya, because I think those markets are going to also follow suit. The markets in the Philippines have been locked down, and they are eagerly wanting to migrate to some place where they can enjoy some level of freedom that they do not currently have in Manila. And so Batangas Bay has received a significant chunk of that demand. The Tagaytay Highlands, in particular, have seen a tremendous amount of visitor arrivals from members that they have not seen in 15, 20 years. And so property prices in Tagaytay Highlands are back, and visitor volumes are back. And I think that will be sustained all throughout post-COVID. So I also want to say that in the last 15 months, I have been heavily criticized for maintaining optimism, and to the point where people think that I am overly bullish, which I want to say to you all today that I am not. I am cautiously and realistically optimistic. I am realistically optimistic because my optimism is founded on reality and based on facts that people primarily choose to ignore. And frankly, a big part of the criticism I'm getting is from the likes of buyers who want to buy during this COVID season, and they want to buy at COVID discounts with significant 20 to 50% discounts on things that they want to buy in this market. And frankly, most of the sellers are holding, and therefore they're not getting their COVID discounts. And so occasionally some people will remember and thank me for the good things that we do say in the market, because people have forgotten those good 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 news and good items in the market. And predominantly those are sellers who are thanking me. So I want to share with you all that have no hidden agenda other than saying things as they are. There is an ocean of bad news out there, and if you want bad news, well, I'm sure you can get that from so many people. And so we as a firm have made a decision to be a little different in reminding people that despite this ocean of bad news, despite this recurring process of bad news, that it's not all bad and there are good things happening in this country. I have lived through the 80s crisis, the 90s crisis, the 2008 crisis, and the COVID crisis so far. And I could tell you that this crisis, although it has ravaged economies globally, is still better than the 80s crisis. It's still better than the 90s crisis for the Philippines. And yet, a lot of people have lost their lives. About, I think, what is it now? Close to 20,000 people, I think, if I remember correctly. But please remember that the Philippines in the 70s, in the 80s, in the 90s had much, much, much higher deaths to diseases like tuberculosis, pneumonia, and heart disease, which has killed off more than 30 to 50,000 people a year each year in each one of these diseases every year for 30 years. So again, if you look at it that way, the numbers are climbing, but they are not as bad as other diseases that continue to ravage the Philippines even up to today. Okay, so I would like to focus on three markets: the office sector, the residential sector, and the tourism sector. So, in summary, despite the contractions of many companies, there are still new leases happening. About 109,000 square meters of office new leasing happened in the first quarter of this year. And the full year 2020, we still saw something like 400,000 square meters of new leases. And for 2020 numbers, those are some of the highest numbers of new leases in the world. Okay? And that's despite of COVID. That's despite what everyone says about, oh, people are not going to go back to their offices. Oh, people are not going to need offices anymore, and that people are going to stay home and work from home. I don't think that's what many people are doing, despite what they're saying in the market. And so 95% of leases continue to be current, and all the tenants that we service, maybe 3 to 4% of those companies did not renew or cut their leases, but 95, 98% of those clients have renewed their leases by as far out as 10-year leases. Okay, so 95 to 98% of our clients continue to renew leases even through COVID, and in some cases much higher than their pre-COVID leases. Okay, and this overall supply is falling for the next 5 years. PEZA continues to be a tight supply all across the Philippines, and I would encourage the Philippine government to facilitate granting new PEZA zones because the BPO sector need it. The Philippine BPO sector continues to be the number one driver for Philippine office demand, starting from early 2020 all the way through to today. The POGO sector has pretty much disappeared from the market, although I think there might be some light at the end of the tunnel because, from my understanding, there are moves to restore the confidence of the POGO sector in the Philippines, and that if that happens, then we will see a big resurgence in POGO, and that will be a significant driver for demand, not just for the office sector, but residential and tourism. The tourism the residential sector from the middle and below continues to get ravaged. But from what we have seen in this market, the upper middle and above have been climbing since the third quarter of 2020. And this is their third quarter of growth in terms of new sales velocity, in terms of resales, in terms of price appreciation. And if you look at the annual reports that have been released by the big property developers like Ayala, MegaWorld, and SM, and if you look at the first quarter earnings reports of these three companies, they validate our statement. Okay, that the upper middle and above are climbing, and that pre-sales have been highest since they have been in comparing it to the second quarter of 2020 at the trough of the market. And then tourism is hit really hard right now, but as we have seen, there's a lot of demand from the domestic tourists to go out as soon as they are able to be allowed out. And so we've seen places like Amanpulo, Boracay, Bohol, Siargao increase very quickly, go from zero occupancy to like 70-80% occupancy once they are allowed, once the government allows people to travel. And then when the government compels the economies to shut down, those occupancy levels go down. And I expect that as soon as we are allowed back out, these occupancy levels will jump again very quickly back to 80-90% occupancy. But the bigger picture for tourism is that while we are locked up in our homes, the government and the private sector have been working very closely to open more and more infrastructure projects throughout the Philippines, and not just in Mega Manila, not just in the geography between Clark, Cavite, Laguna, and Rizal. There are many infrastructure projects in the pipeline that will open in the next 12 months. And I don't know if you've seen it, but there's a video going around about the new road project that was recently completed in Boracay. A very nice, well-paved road network shining through the length of Boracay, and in most places coupled with sidewalks on both sides. I think that is a 30-year-long wait, which this administration finally made happen. Another achievement compared to previous administrations. And that's just one of many, many other road projects, airport projects, and bridge projects throughout the country. And that is just going to help tourism because it's going to open a new experience for Philippine tourism by foreigners. And what I'm most excited about is Clark, because Clark Airport is going to open in a few months, I think sometime around August of this year. And that's going to be really, really exciting because it is going to spell a new tourism market for the North and a fantastic experience for foreigners coming into this country. Many foreigners who need to come to the Philippines can bypass Manila and can access Clark as the new gateway. And from Clark, they can go to Quezon City within 30 minutes and service what they need to service in Quezon City and then fly back out of the country. Clark will open up the new tourism market for the entire North Luzon because, as you know, North Luzon was pretty much cut off from the rest of Manila because of the Lahar issues and the volcano that exploded in 1991, 1992. That pretty much made it difficult for people to traverse and therefore trade to traverse between Manila and North Luzon. And so that is going to rapidly change. People from North Asia coming to the Philippines through Clark will cut their travel time by 1 hour. It will cut their exit out of the plane through the airport, out of the airport by 40 minutes because that's how long it normally takes in NAIA to get out of your plane and out of the immigration, out of the baggage counter, and out the door into your car. And the experience from the airport driving through northern Luzon is fantastic because northern Luzon is where you find some of the best roads that's ever been built in the Philippines. And these are new roads. These things, ladies and gentlemen, will provide a new experience for Philippines and for foreigners traveling through the Philippines. The other thing that excites me about Clark is that it connects North Luzon to the rest of the Visayas because the Visayas has built something like 7 new airports in the last 7 years between the Boracay Airport, the Puerto Princesa, San Vicente, El Nido, Busuanga, Iloilo, Davao, which is not part of Visayas but Mindanao, uh, and the Tagbilaran Airport. These are all fantastic airports that if you have not gone through it, please go through it because the experience there is so fantastic. It's so fantastic. And imagine if you're a tourist, you don't need to fly into Manila because really you don't have any business in Manila. You go into Clark, and then from Clark, you go directly to Boracay or Bohol or Cebu or Palawan and take your pick. And it just becomes a seamless, hassle free vacation where waiting times are very short, where traffic comes in through very quickly, where people are very nice and friendly, and there is no traffic. Fantastic. Next. I want to dive deep into these markets now. So first, the yellow line on this screen shows you the total demand for office space throughout the country, and you see that the bottom happened in second quarter of 2020, and it's been climbing up. It's been climbing steadily for the last 3 quarters, and we're about halfway to the peak of the market. So we're right now in the midpoint. And we've made a dramatic climb from the bottom of the market to where we are today. And we expect this to continue beginning the third quarter of this year. There will be a pause, I think, in the second quarter because of this lockdown and this ravaging of the new waves of mutant viruses that are in the market today. I am hopeful that significant doses will arrive in the second quarter and the third quarter as the private sector is allowed to procure vaccines directly from manufacturers, bringing it in on their own power without depending on the government. And second, I am hopeful that the global pharma industry will either have cures for certain variants or new doses for the other variants sometime in the third or fourth quarter of this year. So all these things will play into increasing demand for office space because new stability in the West will allow the West to move more jobs in the BPO sector to the Philippines, and that will translate to new demand. You can look at the blue line, which is the BPO sector, and they've been steadily growing. The corporates in green are driven by conglomerates, local conglomerates in the Philippines, and second by the online retail companies like Lazada and Zalora and Amazon that are taking space because of the dramatic increase in take up from the online consumer. And then you've got Red Pogo, which was the largest driver of demand in 2017, 18, and 19. And because of COVID and the tax disputes with the government, they were pretty much shut down, very quiet. They had no demand. And in fact, during this time, they contracted the most space in the last 5 quarters. But we are seeing that demand for the POGO sector is slowly improving. Next. And this just compares 2020 fourth quarter with the first quarter 2021 numbers. And you can see that it is meaningfully about 20-25% more than what it was the last quarter. And the colors show you who's taking up space. It's pretty much a very wide, broad segment of the economy, despite the contractions in the economy by 10% in the full year and 4% in the first quarter of this year. Next. And what we see in the pipeline, our optimism is based on reality, and the reality is that there's 266,000 square meters of new leases that want to get transacted within this year. A pipeline of deal flow of new tenants wanting new space in the market. This is something that very few people see in the market, and we are one of those few people, if not the only ones in this market, that's seeing that pipeline. And we've consolidated all of this information for you to show you that things are not all that bleak. That despite the havoc of COVID, new demand, new businesses still want to open here. New companies still want to expand and open businesses in the Philippines. And I can tell you that many businesses don't have, sorry, I can tell you that many countries don't have this pipeline. Many countries wish that they were like the Philippines today with this new demand, in addition to the first quarter 109,000 square meters of new take-up for this year. So this will, so I'm seeing that 2021 will be at the worst case the same numbers as 2020, if not better. Okay, if not meaningfully better, most likely meaningfully better, because I think more and more businesses will open shop in the Philippines. Next. And this is retail. A lot of people have said retail is dead, and I say no, because 19,000 square meters of ground floor requirements want to open in Manila, mostly in Manila. Okay. And why Manila? Because Manila is still 40% of the GDP of the country. It is the single biggest driver of the economy of this country. And therefore, new concepts, new restaurants want to open. And this is the breakdown. So almost half of the demand of ground floor space is driven by showrooms, whether cars or furniture or other products. And then surprisingly, another close to 40% of demand coming from restaurants, because what's happening to the restaurant industry? Yes, a lot of restaurants have closed. And as we highlighted as early as April of 2020, we said that half of restaurants, if at the very least, half of restaurants will disappear in the next few months of COVID. And that's something we said exactly a year ago, 13 months ago. And that's what's happened today. But despite that, because of the drop in rents and ground floor rents, so what was typically 3,000 to 4,000 square meter pesos per square meter a month in rent in Bonifacio, those rents have come down to 3,000, 2,500, 2,000 pesos per square meter per month, and that has made many restaurant concepts viable. And so restaurateurs are taking advantage of this and saying, hey, rents have come down, competition has been eradicated by about at least half. And so if we open now and in time for when the vaccination of the population comes to a peak and the economy opens, we will open with all these very eager customers wanting to eat in our restaurants, with competition, a significant chunk of competition out of the way. I think that's a very good prospect for a restaurant owner. And then many other concepts are coming on because of the drop in rents in ground floor spaces. And so retail is not dead. And despite the fact that online retail has surged, there are still brick and mortar retail businesses that want to open. And these are operations outside of the malls. And a lot of people have asked me what's going to happen to what's going to happen to the retail sector. Well, the retail sector will continue to recover as we allow more people to visit the malls. As density requirements become relaxed, then the population will go back to the malls. And the upper end will continue to shop online when they need to, but that will be restricted to, I would say, utilitarian efforts like if you have to do your grocery, if you need to buy a tray of eggs, if you need like a pair of socks or things that don't require a lot of attention when you buy, you will buy online. But fitting clothes, touching bags, and feeling shoes, and all these things, I think people will go back to the malls precisely to reconnect with their product and their shopping experience, which they have missed out on for the last 15 months. And this slide shows you the BPO sector and how well the demand has been going. And 191,000 square meters of demand has happened in the entire 2020, with almost a little over 40% happening in the provinces. And I'm so happy to say that Iloilo has surprised everybody, and that Iloilo is the biggest recipient of BPO demand outside of Manila. And I congratulate Mayor Treñas for a fantastic effort in working with the academe, local businesses, and the BPO sector to make things so easy for companies to expand in Iloilo. And I thank and congratulate ILED, the Iloilo Economic Development Council, for doing such a fantastic job in making sure that everyone in the community work together between LGU and national government and the private sector in Iloilo. Next. These are just some companies that continue to expand, and these publicly listed companies that are specific BPO companies have grown in revenue through COVID. Okay, these are COVID numbers and double-digit returns, and especially for somebody like Accenture. And yes, while their numbers are at 2.55%, you can look at that as a very small number, comparing it to companies like Teletech or TTech, as they're now known. But actually, it's very hard to do because they're coming from such a big base, about 43 billion moving to 44 billion. So they've added another another $2 billion in revenue. That's significant scale that very few companies have. And so we have to congratulate companies like Accenture, like Teleperformance, like TTech, and Concentrix for doing such a fantastic job growing despite COVID. And that is where you see the industry going. You cannot count the BPO sector, and the BPO sector will continue to be relevant for the Philippines for a generation to come. Next. And the BPO sector is penetrating all geographies in the Philippines. Why is that? It's because they have saturated Manila. Many companies that are in the Philippines have enough presence in Manila that they went to Cebu for an alternative site. And now that they've saturated and built scale in Cebu also, they are now going to penetrate other geographies in the Visayas that we have seen in Iloilo. They are penetrating other parts of Luzon, such as Cavite, Laguna, and they are going to be going into Clark in a very big way. I'm very excited about Clark because Clark now has all the elements to be the next growth center for the next 30 years for Philippines. Clark will be a growth center for the next 30 years in the Philippines because of the combination of infrastructure, of the need for BPOs to expand. And if the POGOs come back, they will go back to Clark also in a very big way. And tourism will have a gateway through Clark and opening up North Luzon and the fantastic coastlines and tourism potential of the entire North Luzon. Next. There's a lot of supply right now, and the vacancies we have not seen at these levels in a long while. There's exactly 1.4 million square meters of total vacant space in Manila, which may sound alarming to you, but remember that we're coming from a base of almost 13 million square meters of office space in Metro Manila, one of the biggest markets in the world today. And the Philippine total office sector is roughly, I think, about 15 to 16 million square meters all throughout the country. And a lot of people are saying, oh my gosh, there's 1.4 million square meters of office space vacant, and therefore prices have to come down significantly. And we're saying not necessarily. Next. Why is that? Because much of this 1.4 million square meters are fragments of office space throughout the 7 to 10 business districts in Metro Manila. So more or less 50% of all these 1.4 million square meters cannot influence the market because they are just pockets of office space spread across close to 300 office buildings. Okay, and there's only 40 buildings that have the other 50% of this supply, and it's just really a matter of time before these buildings get leased out. And by time I reckon in the next 15 months, a significant chunk of this vacancy will get leased out. And that is why rents in Bonifacio continue to stay resilient. They have not come down. Quezon City rents have not come down meaningfully. And yes, the Bay Area has been hit hard because that's where the most contractions in Pogo have happened, followed by Ortigas because Ortigas have a lot of developers that are building very big buildings. And so the concentration of supply really is in the Bay Area and Ortigas area. Next. And supply is coming down significantly. This is new supply in the market and how COVID has been affecting supply. So supply has been pushed further and further out, so much so that it's dropping at a very rapid pace. And to prove that point, next slide, I'm showing here four colors. The green line is where demand was in 2019. The tan line, which is the other dash line in the cutting through the middle of this slide, shows you where demand was in 2020. The orange curve is showing you supply for 2021 all the way through to 2025. And as you can see, it is decelerating at a very rapid pace. And then PEZA space in purple, which shows you that the PEZA supply is very much below the demand line, which tells me that there will be a deficit in PEZA space for the next 5 years. And if there is any improvement in demand, because we're able to recover from COVID, then you're going to see that supply overall will fall below demand. And I think that's going to happen in the second half of 2022, worst case. And so I think that's going, there's a very good chance that that demand will surpass supply even sooner than July of 2022. And this just shows you what the numbers are. And that's why I say to many developers today, actually, this is the best time to build office space. This is the best time today in May of 2021. It is the best time to start redesigning office buildings. It is the best time to start digging and applying for permits and digging for new construction because you'll be open and available in 2024 at the very earliest, most likely 2025, at a time when the supply is lowest. Okay, and when the supply is low is the best time to complete an office building. And so, just like what many people will tell you in the stock market, the best investors are the ones who have the courage to become contrarians, who go against the tide, who are not following the path. And so we're just applying that mindset to the office market as well. Next. Not blind to the amount of office space that has contracted in the market. And this shows you exactly how much space has contracted in the last 15 months, who has been contracting, and where these geographies are, and at what rate. And you can see in that yellow line there, that rate of contraction peaked in the third quarter, in the later part of the third quarter of 2020, and it has decelerated. And we expect that deceleration to continue. On the pie chart on the upper left of the screen, you will see who has been contracting. And that's the POGO sector in total, about close to 400,000 square meters of a total number of 851,000 square meters of office space, exactly. And the BPO sector, while they have contracted, they've only contracted 89,000 square meters of office space to date in the last 15 months. That is less than 1% of their total footprint in the Philippines. And that is about 10% of the total contractions that have happened in the last 15 months. And you can see that every sector, the rate of contraction has decelerated. And the POGO sector has continued to contract, although they have contracted more or less at the same pace that they have in the last 2 quarters. Next. Again, POGO sector, in the accumulated contractions in the left side of the screen, and I've been asked who is going to backfill all the space that they have contracted from. And I'm happy to say that 53% of all the space that they have given up is PEZA space at a time that PEZA is needed the most. And therefore, the BPO sector will just very easily slide into a lot of this space. And then the POGO sector occupy a total of 1.7 million square meters of office space, and they have given up 23% of the space. But next slide shows you, sorry, and what we're saying here is that the POGO sector, as you've shown in the previous slide, is starting to grow again. And I think if the POGO sector and the government come to terms and agree on a settlement, then you're going to see the POGO sector come back with a vengeance. And I am so excited if that happens. And yeah, so let's see. Let's just cross our fingers, because the POGO sector will be a big bonus to the Philippine economy, and they will be a big bonus to a recovery. It will accelerate a recovery for the Philippine property sector and the Philippine economy in general if they continue to expand in the Philippines. Next. I want to briefly talk about the residential sector. The orange slide shows you the activity of new units sold. And so there's been a deceleration all the way through the most of the second quarter, and it started to pick up in the third quarter, the new units sold. And then product launches pretty much went from having a great time in the fourth quarter 2019 to very quickly decelerated in the second quarter of 2020. But look at the activity of new launches beginning the second quarter 2020. It went up very quickly, and then those new launches needed time to be absorbed, and that's why you had the orange line inflect, inflect. So as new launches happened, um, it quickly got followed by new units sold, right? And so the developers, all in unison, started to soften new launches all the way through today. And of course, they made a pause in the second quarter because of this new lockdown, as an aftermath of the new lockdown and the new mutant viruses that are in the market. But I think by the third quarter, you're going to see an uptick in new launches again. Now, I'm going to share with you all this information that is not 5 buildings, it's not 10 buildings, it is a compilation of transaction activity in both leasing and sales across 484 buildings, across 100 developers, and 250,000 units. Okay, we are showing you with painstaking detail and effort on our part to produce this information for you, to show you that yes, there are a few buildings that are distressed, a few sellers that are distressed, but overall, given the scale of the coverage that we're providing you today, the market is holding up pretty well. It could be significantly worse, but it is not as bad as what people think. It could be significantly worse, but it is not. Okay, and it could be. It is. I mean, this market is holding up very well, despite what many people forecasted. Next. And this shows you a very busy slide of different product groups. Basically, the downtrend numbers, the downtrend lines, show you price points that are decelerating in terms of take up of sales. The colors represent different price categories. The flat line at the very bottom is the luxury end of the market. And they've pretty much been behaving as they have been pre-COVID. So the wealthy sector of the market, the luxury segment, continue to buy and buy and buy, whether it's COVID or not. They might be harder to deal with because they want bigger discounts, but they continue to buy in this market. And you can see that from the Ayala Premier activity as declared by Ayala in the earnings forecast last quarter, first quarter 2021. And you can see that a number of segments are shooting up again because a lot of these segments are producing good sales numbers in the last 3 quarters. Next. Orange shows you the capital values, and blue shows you rental values. And you can see that rental values have been hit hard, especially in the Bay Area, where they are hit the hardest because the POGOs have the biggest concentration in the Bay, and therefore the biggest contractions happened in the Bay. Makati is also a very big hit district with minus 14% in rents. But and then you look at Bonifacio, the least hit market in the Philippines, because it is the most resilient sector, because it is the most favored housing market in the Philippines. And that's just rents in blue. But if you look at capital values, look at capital values. And most especially comparing it against the contraction in the economy. The economy in year 2020 contracted 9.5% to 10%, and 4% in the first quarter 2021. And look at capital values. They have been fairly resilient across the board, with the exception of Ortigas and Mandaluyong. Why? Because this is predominantly a upper middle class community. And the upper end of the market have continued to hold ground across all segments, all geographies. It is a testament to how low debt levels are. And residential lots have been very resilient. And as I said, Ayala Alabang has gone up by as much as 20%. But let's not talk about the last 5 quarters. Let's talk about the last 50 years. And you can see here across different villages, primarily Ayala villages, because they were the first to come up with villages that continue up to today. From Ayala Alabang all the way to New Valley, they have produced very meaningful um, average growth rates for the last few decades. It's been a phenomenal ride. It is a manifestation of how resilient the economy is, how resilient the owners are, and how low the debt levels are. And for those of you who missed out on Batangas Bay, you still have a chance to go to the other famous resort built by Ayala Land, which is Anbaya Cove. And you can see that from the last 15 years since Ayala first opened Anbaya Cove, they have had a meaningful return in the market. That's despite all the crises that we went through in the last 15 years. And at 24, 25,000 per square meter, that is what prices were in Punta Fuego, in Peninsula de Punta Fuego in March of 2020 before the lockdown. And today, average prices in Punta Fuego are doing anywhere from 70 to 100,000 pesos per square meter today, May of 2021. And I think there is a very good chance that Anbaya Cove will follow this route. Because just as there is significant wealth in the south, there's also a significant base of wealth in North Luzon, actually north of Manila. From those of you living in Green Hills, in Valley Verde, in Green Meadows, Corinthians, all the way further north, Anbaya is the best place for you. And the Skyway 4 of San Miguel, and very soon the Skyway extension of Metro Pacific will just make that travel time even shorter. Next. And look at this, residential prices monitored by the BSP and how they have behaved, and vis-a-vis interest rates, vis-a-vis lending rate, meaning the rate of lending by banks, and overseas remittances. And there is really a very close correlation between overseas remittance flows and residential prices. Residential prices reflecting the balance between demand and supply in residential property. And you can see that when there's a dip in overseas remittances in red, you will see a corresponding dip in prices in the residential sector the following quarter. And when there's an uptick in if there's an uptick in overseas remittances, you will see an uptick in prices the following quarter. No other metric has a direct correlation to residential sector as the overseas remittances. It is closer to the residential sector than it is to lending rates, than it is to the amount of lending by banks. And so I am quite confident that the residential sector will continue to stay healthy and hold in value because remittances continue to flow in despite what everybody has said against overseas remittances. That remittances continue to be resilient. And yes, while they had a dip in the last quarter, overall, in one calendar year, every year for the last 30 years, it has been undented in history. So I expect that to continue. Next. And property prices continue to stay resilient, and this is the range of condominium prices throughout Manila. Next. Tourism. there is a correlation between the amount of clicks you see online in Google and the number of arrivals because of tickets booked in the Philippines. And yes, this is what the Google metrics show you in the last how do you say this, last 2 years, 3 years, and divided into quarters. And yes, there's been a dip since COVID started and the lockdown started, but when the economy started to open, you see this massive climb, and we saw that in tourism numbers, tourism activity, which is predominantly domestic. And for those of you who don't know, pre-COVID, domestic tourism is 92 to 93% of total tourism activity. Foreign tourist activity is very low in the Philippines. It's one of the lowest foreign markets in the world. It is certainly one of the lowest in Asia. And we only enjoyed 8 million tourists in 2019, the highest numbers we've ever seen in tourism. We compare that to countries like Thailand, where they enjoy anywhere from 35 to 40 million tourists a year, every year for the last 10 years. And I am confident that we're going to reach 8 million as soon as COVID is lifted from the global economy. Next. We have to thank a couple of people. So first is Secretary Dominguez, because Secretary Sonny Dominguez has managed the fiscal aspect of this economy so well. If not for him and his economic team, this country would really be hurt badly by COVID. But because of everything that they have done to the fiscal management of this country and looking out for all the tax reforms for the millions of Filipinos, we have been in the best economic shape we've ever been at the onslaught of COVID. Well, what we're trying to say is that if we were not so fit fiscally, COVID could have ravaged us even more. And because of their management, the credit ratings were upheld, not withheld, but upheld and reinstated and reaffirmed. And so much so that the Japan Ratings Agency upgraded our ratings during COVID. We are only one of only 11 countries in the world that ever got a credit rating upgrade. And there were more countries downgraded in 2020. And because of those credit upgrades, interest rates continued to fall. And because of that, infrastructure projects became more and more and more viable. And that's and because of that, that's benefited the overall economy. And because infrastructure became more available, the second person we have to thank is Secretary Berna Romulo, because she has managed the tourism sector very well. And as you know, it's very hard to manage 110 million Filipinos spread across 7,700 something islands across the Philippines. And despite all those challenges and low budgets, etc., the Philippine tourism market continues to do well. And next is complementing the government's effort and Secretary Romulo's efforts. Next slide, please. We are being supported by so many foreign influencers. You can just go to YouTube and search tourism in Philippines, and you will see hundreds upon hundreds of individuals promoting the Philippines in such positive light, encouraging foreigners across all ethnicities, backgrounds, economic classes, and countries, promoting the Philippines, encouraging people to relocate in the Philippines, retire in the Philippines, have a second life in the Philippines, and visit the Philippines. And these are just some of the examples, some of the people who promoted the Philippines, promoting the Philippines. They've got millions upon millions of viewers. They've got millions upon millions of Instagram followers. It is amazing. Next. And then again, another set of examples of foreigners that are promoting Philippines. It is amazing. We have never gotten this much support locally, nationally, as well as internationally by people who pretty much had nothing to do with the Philippines prior to their visit here. They fell in love with the Philippines and they stayed in the Philippines, continued to add to the positivism, improving things that are wrong in the Philippines, contributing to the solution and not to the problem. Next. Again, I will sound to you like I am bullish, but I am not because I am fully aware of the problems that this country has. I am not bullish. I am cautiously, realistically optimistic, and my optimism is grounded on the realities of what you see in the Philippine economy and the property market and the millions and millions of people that are supporting the Philippines outside of the Philippines, not just the overseas Filipinos that are outside the Philippines, but foreigners that have been touched positively by the Filipino people and by the experience here in the Philippines. Things are improving because of the credit ratings upgrades, the collapse in interest rates, the amount of infrastructure that's being completed in the next 12 months, not in the next 12 years, but in the next 12 months from May 2021. All these things should excite you, and people should go long in property. And what this COVID crisis has done is just validated that people should also invest in property. It continues to generate cash flows through the worst crisis we've had in 50 years. It continues to hold value, preserve value, despite the contraction in rents, contraction in yields, and contraction in jobs and employment. And that because of all this infrastructure and the collusion of all these good things, the next 30 years for Philippine property will be very, very good. And with that, thank you very much and good luck in your journey towards prosperity. Thank you very much, everyone.